So a break of structure happens when the price moves beyond a key support or resistance level. Now this break can indicate a potential change in the market direction or confirm the existing trend. So as we can see here from my pole drawn out diagrams, we have an uptrend and we have a downtrend. So I'll quickly mark the uptrend in green and the downtrend in red. To start off, we have our higher high and higher low. And this is the break of structure right here. Because the new high broke past the previous high, we have created a break of structure. And this break of structure occurs every time this break happens. Each time it happens, it's called a break of structure. Now the same can be said for a downtrend. So every time we break a low, that is a break of structure, and it shows that the trend is continuing. Super simple subject to grasp. Again, we sort of covered it in the basics where we talked about uptrends, downtrends, and ranges. It's pretty much the same exact concept. So again, just to clarify, in an uptrend, a break of structure to the upside will show us that the market is continuing to go up and that is looking quite bullish. And in the downside, every time we break a low, it shows us that the market is getting weaker and that we are bearish. Now, in a sideways market or a ranging market, it is slightly different. So we don't create a break of structure like we have seen here. Instead, the market will be ranging like this, and our structure is this high and this low right here. So we will either have to break down or we will have to break up, and that will be our break of structure. Now with break of structures, it is key to always wait for a candle close. Now if we go into the chart here, we can see that we had a high here and we broke structure to the upside, thus continuing the trend up. As you can see, we are in an uptrend and we are constantly breaking the structure. Here we had a break of structure, here we had a break of structure, here we had a break of structure, and you can see we constantly continue going up. Now the candle still may go below that break of structure, but as long as we don't create a lower low, it is still going to be bullish, and the same exact thing can be said for a downtrend. Here's an example for the downtrend. So we have our low right here, we break the structure, we continue down, we create a new low, we break the structure, we can continue going down, new low, break of structure, continue going down, new low, again it continues going down until we have a change of character, which is what we're going to move on to next. Now a lot of people will get confused between a break of structure and a change of character. Change of character refers to a noticeable shift in the market's behavior that often signals the beginning of a trend reversal. Change of characters usually will happen before a break of structure and is an early indicator that the current trend will be losing strength and it's changing direction. So here is an example. We see a downtrend, and every time we have a break of structure like here, we are continuing down. Now when we get a change of character, this is it. So we can see we had the lower high right here and the lower low. A change of character in a downtrend will be a higher high going above the previous low. I'll quickly mark this as green to signify the change of character. The easiest way that I personally remember break of structures and change of characters separately is that a change of character is literally the market changing. We're changing from a downtrend into an uptrend, or again from an uptrend into a downtrend. As you can see from the diagram, the biggest trades are going to be caught from the change of characters, just because you're entering or you're finding a trade that is entering a new trend in the market. We can see here, I'll quickly mark this in white, we can see here that we're getting a break of structure to the upside every time in the uptrend because we're breaking past prior highs as higher highs. Now the change of character in an uptrend is again going to be when we break past the previous low with a lower low. I'll quickly mark this as red. This is our change of character. And then what you'll usually notice, and the easiest way to determine whether a change of character has occurred, is whether in a downtrend, whether we create a higher high and a higher low. That will usually signify that the change of character has occurred and that we should see a reversal. And the same here, when we get a lower high and a lower low confirmed, this will signify that we are changing direction. So on the charts, if we go on here, we can see we were in a downtrend. Again, this is slightly more choppy, but the same still applies. So we have our high right here, and we got a slight change of character here, but again we closed below on the next candle, so this does not count. The main change of character that we got was when we fully closed here, created this high and this low thus after. Then you can see we continued trending up after the change of character from the downside. Now after that upward trend, we had this support right here, or the swing low, and you can see once we broke through, we created a lower high and thus then creating a lower low, continuing the downtrend down. Super easy concept to grasp. Again, if you didn't grasp a certain point, just rewind the video and it will be easier to understand. Now, a lot of traders will use a CHOCH or change of character as an early signal to prepare for possible changes in market direction. However, it is super important to remember that a change of character alone should not be used as the sole basis for making a trading decision and entering. To confirm a potential trend change, it's advisable that you look for additional signals or confirmations, again, as we discussed before, such as a break of structure or other technical indicators. If you simply enter off a change of character, then it could lead to riskier trades, your stop loss being hit more often, and you just simply losing money. Now, there is two common mistakes that a lot of people and a lot of traders will make. The first one is entering too early on a change of character without a break of structure. Entering a trade based on the change of character without waiting for a break of structure to occur afterwards can be very, very risky. A change of character only signals a potential trend change, but it isn't always an indication that the trend will change, and that's why it's always very, very important to wait for a break of structure to occur after the change of character in the direction that you want it to. The second mistake is entering way too early without seeing the change of character or break of structure candle close. Most traders will usually get a lot of FOMO and they will enter a trade before the change of character or break of structure candle closes, which can lead to a lot of mistakes. The candle might change shape before it finishes, it can reverse, it can do a lot of things, altering the signal and altering the trade. You should always wait for the candle to finish and to close and for the next candle to start on the change of character or break of structure to confirm that the trend is valid. Again, if you do this, it will reduce the risk and it will increase profitability. So here is a quick and simple trade that you could have caught using the change of character and the break of structure as your strategy. Again, we're going to cover way more things in the further episodes, so this shouldn't be your single strategy. This is just something that you could have caught by using just the change of character and just the break of structure, and again, some swing lows and swing highs. So we can see the market was moving in an upward direction here. We created this swing low and then we continued moving up, creating higher highs and higher lows, ultimately being in this uptrend. Then we created this swing high and that's where everything changed. We started going down and we created our first lower high here and lower low. Then here is where we got our change of character. We had this higher low right here. We broke below with a candle close, as you can see here by that blue candle, which showed us that the change of character is valid. Then we went back up. We created a lower high because it's lower than this high right here, and we continued down. Then we waited for the break of structure, which you can see here. We broke this low and continued down. Now, usually if you're going to use this strategy, just the change of character and just the break of structure, you would be entering just after the candle closes on the break of structure candle. So this candle closed and this candle opened, and that is where you would enter the trade. So again, got slight drawdown because we tried to retest, and usually you would place your stop loss at the previous high because, for example, the trade or the market should not go above this previous high if we are going into a downtrend. If it does, then it means the trade is invalid, and thus you should be stopped out of the position before you lose any more money. Because if we break past this high, then it could show that we're going back into an uptrend. Now that we've reduced the risk by adding in our stop loss at the previous high, the market did, luckily for us, continue going down, and we placed our take profit at the previous low. Again, you could have done any one of these lows. You could have done this low, you could have done this low, you could have also done this low. There's many lows that you could have gone from. Again, I just chose the lowest one, or you can also choose all of them and just have multiple take profits. So this is a quick and simple strategy that you can use. Again, we're going to cover way more key segments of smart money in the next episodes, and you can add those on as confluences as well.